Welcome to the 2024 Economic Preparation and Depression Channel. I'm your host, Tony. Thank you for joining me on this July 29th, 2024 edition. Ladies and gentlemen, we're here to talk about just briefly this economy that's doing well but having mixed signals. It's doing well on one end but not so well on the other end. Dow Jones ended mixed with the Dow Jones down 0.12%, S&P 500 up 0.8%, and the NASDAQ up 0.7%. But in spite of all that, right now, many Americans are finding it hard to get and keep a car. This was on CNN Business today. And it's interesting because, the interest rates are still elevated. Yes, we may get that anticipated rate cut either in September, October, or November. But looking at the customers, at these car lots, you see a lot of huge inventory for new cars. And used cars, and the newer cars are having a lot of quality control issues. Every week there's a recall on some of these cars, a lot of these cars, and people are wondering, should I just keep what I got? And even if I do keep what I got, how am I going to get the parts that are to fix the thing if it's, made? A lot of parts are made in Mexico and other countries, and even the parts that are made here, they're very hard to get. They're on back order. So there's a lot of concerns about that. People are looking to upgrade their cars, or at least, keep them going. And the average age of a new car is 12 years. The average age of Americans' cars now is 12 or 13 years that they've kept it if you don't get a new one or a new used one. And, it used to be you'd be able to pay cash for a car, and back in the, 20 years ago or so, 15 years ago, and it would last you a pretty long time. And then you would have a car for different things. Like you have of course a newer car for your regular travels, and then a kind of a hoop to get to work, or to do work around a truck to get to do work around the yard or work around the house. Now the prices with the loan applications, are going down. As far as because the car maintenance cost is taking the big chunk of Americans' budget. And also, delinquencies, repos are climbing on some of these cars that are being financed over 84 months or stuff like that. When some of these new cars, people are financing, were at the time before the pandemic, Dodge Chargers and all kind of, huge trucks, 4x4 trucks with hitches and Jeeps with wrenches on the front and all that kind of stuff. That was during the height of the pandemic when things were good, when easy money was flowing, zero interest rates on these cars for 36 months, etc. But now things are tightening in some of these markets, and you can see these cars sitting on the lot, and they're slashing the prices down. You notice that a lot of these dealerships are slashing these prices down, and not many are selling. Because of the situation that we're in. A lot of used cars. Remember 2 years ago, they were offering people money to give their used cars in, to trade their used cars in over the auction price and get into another, newer car, and they were offering you double the money for it. But now those days are gone, it appears. And so just what do you think about that? I see repossessions are rising. This article says that repossessions are rising in some states, not every state, but in some states, the repo man is making a killing on taking these cars back. And so that's very interesting, very troubling trends here as far as the auto market and what it's going to be experiencing here in this economy. So MarketWatch.com says the main engine of U.S. economy, consumers, show no sign of sputtering. Household spending defies talk of big slowdown. So right now, things are looking good according to this article in terms of people spending money. People are still grocery shopping. They're still taking vacations. They're still, prepping as best they can. But this is just the way they spend it. Like I said, Americans know that after this year, things will be different. As far as not just because of the political, but just because of the economic. The dollar has been the king of the champ for 85, 90 years, since 1913, and now other countries are competing for resources, and that's what it's all about, ladies and gentlemen. It's about natural resources and resources, as far as food, water, security, and all that. That's what's really going to be important. As far as the dollar is transitioning here, as we transition to this autocratic economy, this automation, part human economy, that's going to be some changes. So right now, the economy, yes, it does look good considering everything that's been through, but that doesn't mean that things can change. And right now, stocks market today, according to Bloomberg, the street to stock markets in mixed amid break week for the markets. Tech has gone down a couple of weeks. Everybody was crazy about Nvidia stock, and now things have gone down. With Nvidia cooled down a little bit now, and so people are wondering the Magnificent Seven, Facebook, Google, Apple, etc., Netflix, Amazon. Everybody's like, oh man, should we buy more of those or not? I don't know the answer to that, but obviously, and I can tell you that in economies that have looked good and have melted up, the stock market and all that melted up because obviously we're going through an inflationary period. So yeah, it's going to look good on paper, but the actual value of those stocks and those things is going to go down because the fact that those economies are melting up. Venezuela's economy melted up. Turkey's economy, Greece economy, all stock markets melted up. Zimbabwe, you name it, Iceland, all those economies, Sri Lanka, all those economies, stock markets melted up, meaning they went higher, but the currency was collapsing, and the debt load only got higher. And this is what we're going to face now. Look at the debt load is at $35 trillion and growing. This is real time right here. You can see. And the spending and the taxes is not going to be able to keep up with that. We're not going to be able to keep up with making the interest payments. The only way to do it is, like you said, is to hyperinflate. That many people believe is to hyperinflate the currency. And once they hyperinflate this currency, that's it. It's all bets are off for most Americans. It's going to take double the standard of living to try to keep up, double 2 or 3 checks to keep up with the type of inflation that we could possibly see. And we're starting to see that now, but it hadn't really accelerated yet, because obviously the one thing that's keeping it in check is that they're still able to print up money, and the unemployment rate hadn't spiked high. Like it's starting to go high, but it's not spiked to 1970s level where you couldn't, or early 1980s where you couldn't buy a job, like where you had to people were looking for weeks and months for a job and it just wasn't there. So that's gonna be very interesting to see how they manage that. But right now we're at $35 trillion and growing, and all of this debt, it's probably never going to be paid back. So the only way to do it is just to have a great reset. And people are wondering, well, how is this going to work out? Obviously they have to get rid of the old system. They're going to have to reset, crash the system, and reset and turn to a new digital currency, and that's coming, because obviously we're not going to be able to pay back $35 trillion of debt. It'll be like the student loan forgiveness or the bank bailout, but just on a broader scale. But it have a lot of stipulations to it. That's the issue. It's not going to be as cut and dry as, oh, you get a check and you get a check. It's not going to be like that this time, unfortunately, ladies and gentlemen. But the good news is that, like I said, we have time to prepare. We have time to kind of minimize our debts as best we can. I mean, obviously we have to live, and the U.S. is a debt-based economy, unfortunately. And not only the U.S., but other countries, Europe, France, Australia, you name it, Africa, South America, everybody is enthralled with the U.S. dollar, and it's a lot of debt notes out there. So unfortunately, but you have to do the best you can to kind of mitigate the damages, and just hope that this thing doesn't turn out as bad as everyone said it's going to be in the next coming years. But it's obvious we're heading toward somewhat of a slowdown after next year, after everything settles down, and that's just we have to weather the storm. So I just want to bring that to you today. That to keep that in mind is that. Continue to prepare, because things are going to be made to look good. But on the other end, you're going to see on the main street more businesses closing, more layoffs by certain small companies, and more reduction of force, reduction of staff, reduction of this kind of things going on later on as we get past this political season, because we just don't have the resources available. You're going to see a consolidation of resources in a lot of these city, county, states, townships, municipalities, what have you, because they're going to be running low on tax revenue and all that kind of stuff once the dust settles. And that means more higher taxes for those who are working and those who are doing things, and less resources, less services, more available to all of us as Americans. So just something to keep in mind. God bless. I'll talk to you very soon on the next episode. Thank you for listening. Thank you for watching. I enjoy your comments. I read them all. Thank you. And I'll see you in the next episode as we turn.